Realty Nation? It's your host, Abhi Gohar. Welcome to the Think Realty Show. I'm excited to be here because in today's show, we're talking about one thing, and that's financing, and how COVID has affected commercial, multifamily, and even a little bit of single-family financing. We're speaking with Anton from Peak Financing, and we're going to get into a lot of really good information here in the next couple of minutes. Now, financing is really important for you newbies and for you pros. You already know this. You're always looking for the trends. You're looking at what financing is available. And you already know what happened during the first month of COVID, right? Single-family rental financing went to complete crap. It didn't even happen. And a lot of commercial financing got pulled by Wall Street. So there's a lot of good intel that I'm going to get from Anton about what's happening during the COVID-19, what are some of his predictions for the rest of 2020 and 2021, and what Peak Financing is doing to really position themselves to be the leader in the financing world kind of moving forward. So excited to have that conversation. Before we get there, huge shout out to the sponsor of today's show, AaronBChapman.com, where you can bypass all the overcomplications of the common suit and tie mortgage guy and connect with Aaron Chapman and his team of real estate investment finance experts at Security National Mortgage. No fluff, no complicated industry speak, just brutally direct action. Visit AaronBChapman.com for more information. That's AaronBChapman.com. My guest today is Anton Mattli with Peak Financing, where we're going to talk about all things financing that you need to know to dominate your real estate game in the rest of 2020 and 2021. Anton, welcome to the show.
Thanks for having me on, Abhi.
You got it. So give us a little background. Who are you? What do you do?
Yes, I'm based in Dallas. Our company has offices in Dallas, Texas, and Houston, but we are operating all across the United States. Even though I'm based in Dallas, as you can hear from my accent, I was not born in Texas. I was born in Switzerland, grew up there. Right after school, I joined what is known today as UBS. I worked in New York for 5 years, Tokyo for 4 years, Hong Kong for 3 years afterwards, and then left banking and have been involved in commercial real estate during my banking time as well as afterwards, both on the investment as well as financing side. Peak Financing is arranging financing for commercial real estate for all asset classes, but we certainly have a very strong focus on multifamily properties.
So when it comes to a beginner, when it comes to somebody that's looking for financing for the very first time, say as a first-time multifamily investor or a first-time commercial investor, what should I be looking at now, knowing that the lending landscape has changed because of COVID-19? Can you talk to that a little bit?
Yes, sure. I would say if you consider the various asset classes and you do not have any preference, multifamily is much easier to get financing for right now than for any other commercial asset class. The reason for that is very simple. We have access to Fannie, Freddie, and HUD, and they have great programs. Some of you have been in the commercial real estate, including multifamily world. You may remember 2008, 9, 10, 11, 12, and so on. And during that time, the agencies were the major force behind the multifamily financing because no one else was willing to lend. And today we have a very similar situation where Fannie and Freddie are major players in multifamily. In any other commercial real estate asset segment, you don't have access to those sources. So you are extremely limited. Mostly it's banks. You have some CMBS loans but it's extremely limited even today. And bridge loans, the same thing. Bank loans also, banks still have been willing to some extent to lend for commercial real estate. But the reality is, and that's more kind of my predictions, as we move further into later this year and the next year, banks will struggle with their bad debt portfolio, which then will essentially result in them having less ability to deploy more funds to lend.
So doesn't that have obviously a direct impact on real estate investors nationwide? Because, like you said, if there's not a whole lot of capital available and their NPL side starts to take more of their time, then what should I be focused on as a real estate investor? Maybe buying the NPLs and then giving you a call and saying, hey, maybe we can finance this in some way? Is that what I'm hearing the opportunity is going to be for 2021?
Yes, I would say there are multiple opportunities. Obviously, the big players have already started that, right? It's always starting out with the bigger players
Sure.
recognizing the trend. So they are buying non-performing loans already, but they buy initially. They really start buying the traded loans, and they have access to all the various services and lenders to pick up massive portfolios. As an individual investor, you do not have access to those. So in reality, the best chances to pick up a non-performing loan is really talk to your local credit union, community bank, and smaller banks, if you have a good relationship there, to hear what they have on the book that they might have a problem with, and they're willing to find a solution for their borrower. So as a beginner, I would say that's probably the best approach there.
I understand. And let's and I know I wanted to dive into that rabbit hole real quick, but maybe we can bring it back to that beginner real estate investor that's thinking about making that first acquisition. Help me understand your process for helping them get financed, because it can be tough if they don't have the capital, maybe they don't have the experience. Is it okay to partner with somebody? How do we work with peak financing? Maybe kind of take me down that pathway.
Sure, absolutely. So again, going back to multifamily as an example, and I pick multifamily as an example because that's where you have probably the biggest activity of people partnering up with other individuals. You have it in other commercial real estate as class too, but multifamily is really the main area where you see it massively. And we call it syndication, and that's a massive element in the multifamily space, anywhere from 2 million, 3 million of property value up all the way to 30, 40 million. Some do it even larger than that, but that's really mostly the space. So when you start out, for commercial real estate in general, your net worth and liquidity are a crucial piece to the amount of loan that you could support from an individual basis. The property itself is underwritten by the property's NOI, net operating income, but you still need to have the net worth, which is typically around equal to the loan amount or higher, and the post-closing liquidity of, roughly speaking, 10%. So if you do not have that, you may wonder, well, what should I do now? Well, that's the beauty about syndication. You can partner up, unlike on the single family side, where you're essentially the lone ranger, your credit scores count, and your debt to income ratio matters. Here, you can partner up with others that bring the financial strength to the table together with you. Potentially also, if they have more experience, that they can bring the experience to the table. And we have seen a number of syndicators that have started out from zero with partnering up with others, and they were able to be general partners or GPs, co-sponsors in multifamily transactions with very little net worth that they brought themselves to the table. Obviously, they found the deal, they brought in sweat equity, but ultimately, they would not have been able to do it based on their own financial strength, but were able to do it with other partners.
I understand. So from what I'm gathering, if I'm new, it's okay to partner with people, to bring a little cash, to have them maybe bring a little cash to be able to syndicate this deal. And then, of course, working with peak financing, that would probably help me get that first deal done, which makes sense. So I've got package A. If I want to purchase this, aggregate some capital, work with peak, and kind of make it all possible. Is there, for the rest of 2020, where do you think the activity where do you think I should be focusing on as a new investor? Should I be focusing on multifamily? Maybe that's a little daunting. Maybe that's a little, maybe the value's a little too high right now. I don't know. What do you think the best possible opportunities are given what you're financing right now?
Yes, I would say solely the best opportunities will pop up, in my view, over the next 6 to 12 months, right? Because we will see more distressed assets. Are they primarily on the multifamily side? It's still too early to tell. Multifamily has held up extremely well through COVID-19.
Hmm.
A big contribution to that, I would say, was the $600 unemployment bonus check that the federal government was providing. As we know now, that has been reduced, and we do not yet know what impact that is going to have. But as a result, multifamily, the prices still have been up there. We have seen maybe price reductions by 10%, in some cases 15%, but that's unusual. In most instances, the prices have held pretty steady. So you are not going to get bargains in the multifamily space yet. I think you need to be patient. You need to educate yourself, put your team together. And I say that all the time,
Yeah.
teams in that space are crucial, right? Your mentors, your coaches, your mortgage broker like us, a lawyer, whoever it is, that team needs to be ready so that you are ready once you find that deal. Now, immediately, obviously, when it comes to retail properties and hospitality properties, that's where the biggest opportunities are right now. The problem there is it's very hard to finance those. So unless you have tons of cash between you and partners, yes, the opportunities are great, but you may not be able to actually buy these properties. So now one aspect there that could potentially, what I have seen now with a number of clients, where you may have an opportunity to take advantage of that tough environment on the hospitality side to buy a property uh, and convert it into a multifamily property instead, right? That can be studios if you have, let's say, extended stay hotel, and convert them to studios without making much changes. Some actually remove walls and they create one bedrooms out of them. There are different ways. Obviously, you need to work with the local zoning to ensure that you're allowed to rezone to multifamily. But I would say that's really where I see the biggest opportunity right now, where you can buy at the lower price and still add a lot of value to a property.
That's very sage advice. And I think for those that are even interested in continuing to purchase, just wait and see what happens in the multifamily space. And nobody knows, like you said, what the impact is going to be with the reduction of the monthly, of the biweekly or the twice a month checks that they get from the government. That's still yet will be yet to be determined on what happens with multifamily in that world. I think there is definitely significant still opportunity in the single family space, especially in your secondaries. I think that's going to be important to take a look at for investors. But like you said, if you can grow and you can start scaling, multifamily is a good way, commercial is a good way to go to. So Anton, what's the best way to get in touch with Peak Financing if we're looking for some good capital? How do I get in touch? How do I start the loan process? What do I need to send you? Maybe take about 30 seconds.
Yes, sure. So the easiest is to get in touch with me. You can send me an email and I will respond, or one of my colleagues will respond. My email address is Anton, Anton, at peakfinancing.com. So that's the easiest way. And just reach out to me and we can start the discussion. That's really the best to do. When it comes to properties, obviously we always need the operating statements, the rent rolls, and when it comes to the buyer sponsors, it's always helpful to have a personal financial statement and an REO schedule and the buyer to start out. But that's not really that crucial when we just evaluate the property itself at the initial phase.
Perfect. Anton, thanks so much for the time. I appreciate it. You got his email address. You can also check out Peak peakfinancing.com. Thanks a lot. I certainly appreciate the time.
Yeah, thank you very much for having me on, Abhi.
You got it. All right, Think Realty Nation, here's what's happening next. You have to go to peakfinancing.com. Understand that process. Get in touch with Anton and his team, because ultimately when you are looking for acquisition, you want to make sure you have the right financing partners, and Peak Financing would be one of those partners for you. This segment is brought to you by Real Property Management, which is the largest residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. You can learn more at realpropertymgt.com or call 888-806-7088. So this is a very interesting, very candid article written by my friend Clint Coons over at Anderson Business Advisors about Airbnb investments during the pandemic. I read an article, the exact same article that he is referencing in the Wall Street Journal on April 28th, titled "A Bargain with the Devil, Bills Come Due for Overextended Airbnb Hosts." I'm going to say this about Airbnb. I think that if you leveraged improperly, you're in a tough spot as an Airbnb investor. If you partnered with a homeowner and didn't run your numbers properly, and you're not on the deed, I think you're in trouble as an Airbnb investor. If one of these two scenarios sound familiar to you, then maybe you may want to maybe you should take a look at deferring your loans if you haven't already. I'm sure you have already. Call your lender and say, hey, just give me a little bit of a grace period, 30, 60, 90 days, and see what happens from there. Clint talks about, so there are two or three unknowns here, and Clint talks about, number one, will Airbnb relax the required 72 hours between rental turnaround time restriction? If they relax that, then that means you have a higher chance of renting quicker, right? So that's awesome. Number two, the unknown, is the American public averse to traveling? I think when there's a vaccine, and we've been seeing a lot of that now on CNN, CNBC, et cetera, if there is a vaccine that is being developed and if it starts to help, then I think number two will start to get relaxed. Now, I don't know when the time frame for that is. It could be December 2020. It could be Q1, Q2, Q3 2021. We're uncertain. But at some point in time, there will be a vaccine. It will start to relax a little bit. Number three, the third unknown, what is the risk if someone brings COVID-19 into your property and then infects other guests, and they claim your property was not properly cleaned? Yeah, from a liability perspective, that's a tough one. So I would even take a look at, call your insurance company and just make sure that you have some extra coverage if they are offering that coverage. And then Clint goes on to say, in scenarios 1, 2, and 3, you might find yourself in a position where you can't make your mortgage, and if a lender does bring a default action on the mortgage, then costs will add up quickly. Will a foreclosure sale cover the mortgage? And that's where, if you didn't do your numbers right, you might be upside down. That's going to be a challenge. Then you might have to, then you would be liable to the lender for a deficiency judgment. It's a tough situation all around if you are an Airbnb investor and you just didn't do it properly. If you did it properly, and so here's what's crazy. I don't want to just say I told you so, okay? I'm not going to do that. But 2 years ago, I think it was 2 years ago, two and a half years ago, I remember constantly talking about Airbnb investors and really underwriting the Airbnb acquisition for a long-term rental. In the event that anything should happen, you should still be able to rent. So for all you guys and girls out there that did not follow that advice, I told you so. All right, that's all I've got to say. You should read this article. Go to thinkrealty.com and please read this article. It's really awesome. And then, of course, you want to make sure your asset protection strategy is covered. And so Clint Coons of Anderson Business Advisors can help you with that. Man, oh man, oh man. That's all I got to say. Okay. It's been fun. I want a huge shout out and thank you to Anton from Peak Financing, and of course the sponsor of today's podcast, AaronBChapman.com. You can bypass all the overcomplications of the common suit and tie mortgage guy and connect with Aaron Chapman and his team of real estate investment finance experts at Security National Mortgage, where you get no fluff and no complicated industry speak, just brutally direct action. Visit AaronBChapman.com today, for more information. That's AaronBChapman.com. All right, I know I just kind of went off on this Airbnb thing, but please, moving forward, just do your numbers right. You can follow us at thinkrealty.com. Get in touch with me anywhere online. And until next time, happy investing. Think Realty Nation.